What's up, everyone? Cryptopher here. Thank you very much for joining me in today's episode, and let's get right on into it. I'm looking at Bitcoin here on the hourly chart here, and as I mentioned in yesterday's video, it looked like Bitcoin was forming this head and shoulders pattern. And what I said in yesterday's video was that I was looking at this trend line here, which is basically the neckline of this potential head and shoulders pattern. And what I said was that I was looking to see that if Bitcoin would break below this neckline, and if it did, that would signify that Bitcoin would definitely see some more downside action. But Bitcoin actually found support at about the 32,500 level and broke above this downward resistance line that was building after it rejected off of the upward trending support line that was building since December 25th. Broke above this resistance line, found support, and actually looking like it's breaking out, which is great. Really great to see. But before I would pop any champagne bottles, what I would be looking for actually is for the 50 EMA on the hourly crossing back above the 200 EMA. Now that golden cross is what I would like to see to find some more confidence on Bitcoin's price action moving up. And not only that, I would like to see Bitcoin break above the upward trending support line that was building since December 25th, because it's a very strong support line that again may turn resistance, because it was holding up Bitcoin all the way through from December 25th up to about January 21st, and that's where Bitcoin really exploded at that point. So it is a very strong support line that I think we should definitely be paying attention to, and those are the two main areas that I would be looking for in Bitcoin to continue its upward trajectory and even go back up to its local high of about 42, let's say 42,000, because that's about 41,900, so 42,000, let's say. So those are the two areas that I would look for in Bitcoin in order for us to continue going on this upward trend. Now, could Bitcoin potentially have, again, some downward price action? Well, there's a potential for that. And what I would like to share with you is this site here called Look Into Bitcoin. It's a great site for you to learn all about Bitcoin. It provides some great free resources. And the first chart here I would like to share that may shed some light on whether there will be more downward action on Bitcoin is what is called the 1 year plus hodl wave. And what this is let me just share here, is that what it is that it's a percentage of all Bitcoins that have not been moved from one wallet to another for at least 1 year. And that is signified by the yellow line here. Bitcoins that have not been moved for 1 year or more. The blue line is the Bitcoin price. And how we look at this graph is that if there is a divergence between the 1 year or more Bitcoins being held in wallets, if it diverges away from the Bitcoin price, then it generally means that as the price goes up, people are selling off their Bitcoin. And a great example of this was back in November of 2013. As the price went up to its peak here, people were selling off their Bitcoin. And as the price was coming down, people then began holding their Bitcoin again. And then it repeated itself in the last bull cycle high of December 2017 here. And as the price went up, the amount of Bitcoin held and being sold, again, there was a divergence there. And right now, where we are now here in January of 2021, we see as the price is going up, the amount of people selling are increasing. So there's a divergence here. So I just want to just zoom in here for you guys to see just a little clearer that as the price goes up, people are selling off at this point. Now, what I would like to see in this graph, of course, is that the yellow line here plateau and start converging back up with the price to show people holding on to their Bitcoin again. And that would signify, and again, give me further confidence to say that Bitcoin is indeed that the sell-off is going to end. So we're just going to have to keep watch of that. But does this mean that that we're reaching the peak of Bitcoin's market? Well, I don't believe so at all. And if we can look at another chart here from Look Into Bitcoin called the Huddle Ratio. And the way we read this chart is that, again, the blue line is the price of Bitcoin. And the red line is the R-Huddle ratio. And what is the R-Huddle ratio? The R-Huddle ratio identifies the market top to within a few days accuracy. And we can see that it accurately predicted the top back in 2013 of December. The R-Huddle ratio line went into the red line, red area here, which signified the top of the market there. And it occurred again back in 2017 of December, where the R-Huddle red line ratio went into the red area and signified the top there. Where we are today is here, where we're nowhere near the red region here. So we're definitely not at the top of the market. And so we don't need to, I believe, be concerned about us being at the top of the market at the moment. So that's definitely some great news there. So again, the two charts here are from Look Into Bitcoin. I definitely recommend for you to go check it out. It's great for you to learn more about Bitcoin and understand more about Bitcoin. So next I would like to share is this article from You Today. And this article, again, is another potential sign that we may see further downward price action. But let's look at Bitcoin again. Yep, it's indeed still going back up, which is a great sign. So maybe a lot of these indicators that I was looking at here will rebound. And well, mainly this one will rebound. And we'll see more positive price action for Bitcoin down the road. But this article was telling us that Bitcoin supply acquired in late 2017 getting moved at rising pace. Glassnode. So Glassnode is an analytics company that analyzes Bitcoin on chain. And what they have found here is that Bitcoin percent supply last active 3+ years just reached a 3-year high of 34.439%. Previous 3-year high of 34.434% was observed earlier today. So what this is essentially saying is that what this most likely signifies is that those investors who acquired Bitcoin at the 2017 all-time high or near it are now dumping their coins to withdraw profits. So these were the latecomers back in 2017 that were holding their Bitcoin, hoping for it to surge back up to all-time high, which it has, and now they're taking their profits. Can't blame them, especially since they entered Bitcoin so late. But you know what? Good for them. Majority of the people are in profit, which is fantastic, and taking a little bit off the table. Hey, there's nothing ever really wrong with that. So that's why, which coincides with the chart at Look Into Bitcoin, that people are selling off and to gain some profit. Nothing really wrong with that. And I don't think we should panic either, because as I mentioned before in yesterday's video, the miners are selling off as well at this point, and you can't blame miners for doing that as well. They need to pay for the electricity and their miners. So I think overall, I don't think there's anything really to worry about with the price slump that we're experiencing. We do need to take profits from time to time. We do need to pay the bills like that of the miners and so forth. So, and we're nowhere near the top of the market as indicated by this graph here. So overall, I think we need to stay positive. And another great sign that we need to stay positive is this article here from CoinDesk. And what this is saying is that in Canada, the ETF is planned to be listed on the Toronto Stock Exchange under the ticker BITU. This is a very bullish article here, again showing the fundamentals of Bitcoin here, and that there's definitely blue skies ahead for Bitcoin. So what is this article saying? A prospectus for a new Bitcoin exchange traded fund has been filed with the Ontario Securities Commission in Canada. Arxnoven Investments Incorporated filed documents for the Arxnoven Bitcoin ETF on Monday. The ETF is planned to be listed on the Toronto Stock Exchange under the ticker BITU. The manager behind the ETF application is Sean Coombe, CEO of Arxnoven Investments. Previously, Coombe held the position of CIO at 3iQ Corp, the Canada-based digital asset manager behind the launch of the Bitcoin Fund under ticker symbol QBTC.U. So this is definitely great to see. And as you know, the ETF in the US has been attempted multiple times but has failed. But I'm sure with the strong fundamentals that Bitcoin has been gaining in majority of 2020 and now into 2021, an ETF here, Canada being approved, would be a great precedent for the US to follow suit as well. So this is definitely some great bullish news that we can look forward to. Now, with bullish news, of course, there's always some bearish news, and this article here being Bitcoin is highly speculative and needs to be regulated, says the European Central Bank's Christine Lagarde. Now, it's half and half in terms of bearish news and good news. Regulation is not something that we should be afraid of. Regulation, if anything, helps support this space, legitimizes this space so that more and more big players are coming in. I mean, we already see major institutions coming in, PayPal, MassMutual, and so forth. And further regulation just helps bring more legitimacy to this space and more bigger players coming in. But of course, this article is a bit of FUD because they're still trying to make Bitcoin sound like it's highly dangerous. So what are they saying here? Quick takes. The ECB President Christine Lagarde has said that Bitcoin is highly speculative and needs to be regulated. Crypto regulations have to be applied and agreed upon at a global level, said Lagarde. Bitcoin is a ledger, an open ledger that anyone can follow suit in terms of where the transactions are going. If anything is more dangerous, it's cash. Okay, cash is still king among many illicit activities out there, money laundering, and that is proven by actually this next article here that I found, which was actually released back on September 9th of 2020. Use of Bitcoin and crypto for money laundering is minuscule compared to the cash report shows. And here it states that money laundering activities by cyber criminals remain to a grave global threat, causing a sizable dent on the global economy, according to new research written by British defense and aerospace company BAE Systems on behalf of the global financial messaging service provider SWIFT. Now, who is SWIFT? SWIFT stands for Society for Worldwide Interbank Financial Telecommunications, and essentially it's a messaging network used by banks and other financial institutions to quickly, accurately, and securely send and receive information such as money transfer and instructions. So BAE Systems created this report on behalf of SWIFT, and essentially what they found is that identified cases of laundering through cryptocurrencies remain relatively small compared to the volumes of cash laundered through traditional methods. So, with that, we need to take a grain of salt with articles that we read. I mean, titles like this are, I think, really just FUD. I mean, regulation is not something we should fear. It's actually great. It brings more legitimacy to the space. But, to say Bitcoin is highly speculative and, potentially more dangerous than that of cash or the traditional system is a lot of baloney. So I think just we need to just make sure we do more research and not just let these kind of titles and articles scare us off, and just dig a little deeper to find out the truth behind the matters here. So with that, I wanted to just say thank you very much, everyone, for tuning in today's episode. If you liked today's episode and you enjoyed this content, please give it a like and subscribe. It really would help the channel. And if you found value in this episode, please share it with someone you know. Again, it will really help the channel, and I would greatly appreciate it. Thank you very much, everyone, for joining in again, and see you in the next episode.